A conceptual framework is a theory of accounting prepared by a standard setting body against which practical problems can be tested objectively. A conceptual framework deals with the fundamental financial reporting issues such as the objectives and users of financial statements. And flowing from those objectives are the characteristics that make accounting information useful as well as the basic elements of financial statements. The conceptual framework also provides the concepts for recognizing and measuring these elements in the financial statements. There are many benefits of having a conceptual framework for financial reporting, and this includes establishing precise definitions that facilitate discussion of accounting issues. Another benefit is that it provides guidance to accounting standard setters such as the IASB when developing and reviewing financial reporting rules. The conceptual framework helps to ensure that accounting standards are internally consistent and at the same time helps preparers and auditors to resolve financial reporting problems in the absence of an accounting standard. And lastly, it helps to limit the volume of accounting standards by providing a main theory of accounting that can be applied to specific accounting and reporting problems. So why is the IASB revising the existing conceptual frame? Before I answer that question, let me first give you an idea of the current conceptual framework that we have. The existing conceptual framework of the IASB was developed by its predecessor body, the International Accounting Standards Committee, in 1989. The material on the objective of financial reporting and on the qualitative characteristics of financial information was revised by the IASB in 2010 as a result of a joint project with the U.S. National Standards Center, the Financial Accounting Standards Board. Although the existing conceptual framework has helped the IASB when developing and revising the IFRS, they observed that some important areas are not covered by the existing conceptual framework. Another reason for the proposed change is that the guidance in some areas is not clear, and some aspects of the existing conceptual framework are out of date. In 2011, the IASB carried out a public consultation on its agenda to make changes to the existing conceptual framework. And most of the respondents to that consultation have identified the conceptual framework as a priority project for the IASB. Consequently, the IASB restarted its conceptual framework project in 2012. So, who will be affected by the revised conceptual framework? First of all, I would like to emphasize that the conceptual framework is not a standard and does not override any specific accounting standards. The proposed changes to the conceptual framework will not have an immediate effect on the financial statements of most reporting entities. However, some entities could be directly affected by the changes if they need to use the conceptual framework to develop or select accounting policies when no standard specifically applies to a transaction. In the future, the conceptual framework will guide the IASB when it develops standards, so it will affect financial statements indirectly when entities implement new or revised standards based on the revised conceptual framework.